correct time frame alignments. I top down analysis on the weekly, daily, 4 hours and 15. I never go for the lower time frames, right? Then I'm using the breaker block, inverted fair value gap, and also the fair value gap, right, for the entries. And then I will explain what I want to see for the entry. So I will be explaining that live on the chart. So there is a possible trade which I will be taking right now. And yeah, so let me explain what I want to see in here, right? So what I mean by bias and the liquidity. So on the weekly and daily, I basically want to see the structure, right? So if I see something like this, where the market is constantly creating lower lows and lower highs, it's basically bias for the bearish, right? It's bearish bias. So I should be looking only for the short trades. It does not mean that I couldn't take a long trade, but it's giving a better opportunity, because let me jump a little bit in the further, because as we have the range in the counter trend, I could be targeting only the 50% of the on the range, but if we are trading with the higher time frame bias and trading on the M15, we could be targeting the whole range, and it's simply giving better risk reward, right? So what does it mean when I'm saying liquidity in here? It's not by the liquidity as a liquid markets in the cryptocurrency trading, but by liquidity I mean that some odd lows, some significant lows, right? It could be previous month high, previous week's high, or previous days highs, right? So actually in this case it would be lows, right? So it's some level where the price came from, and that's where it is most likely going, right? So if I have my bias, right, that I have analyzed that it's bearish, I also should know where it will most likely go, right? Of course, the price will not go just straight away in there, right? But it's mostly doing the things, right? So, but anyway, taking the trades in that direction giving me higher probability, right? So that's what I'm looking for. High 4 hours and 1 hour levels. It's for the entries which I will show you on this price section in here, right? Let me move it a little bit in here, right? And here we have a Bitcoin chart, right? So let me make this smaller so we can still have it here on the charts. Let's say 16, right? Let's put it down here, and let's try to follow up these points which I had in here, right? So if we look, obviously, if we look to the bigger time frame, the Bitcoin is obviously on the monthly, it's in the long-term bull trend. It actually never been bearish, right? Anyway, in here, what do we have here, right? So we have basically here, I have analyzed that this would be a liquidity. Why? Because in these levels, the breakout traders has entered and they expecting the price going up, which is actually correct. But as we can see that the price has dropped lower and creating a lower low, right? A lower low and lower high, and then continuation lower. Then mostly there is a two waves, right? So I do not think that we will go up like this, but most likely something then like this. But this is not what I need to know. Now I need to know that price will most likely go to the range, could go to this range low or this range low, right? So I would be looking for the short for sure, right? Then I'm going lower time frame, which would be for me right now, because this is daily, right? So then I'm going to 4 hours time frame, right? And what I want to see, as I said, that I'm looking for on the 4 hours, I'm looking for the levels, right? So also I could have a daily level, which is for me in here. This is inverted fair value gap, right? Which I have described in here. So basically this gap, right? When the price has been trading higher, right? Then price drops lower. And this gap now works as a resistance, right? So let's look at it in here, and we can see basically that this gap now became the resistance. And look exactly in this midpoint of this gap how the price has been rejected in here, right? So what we have in here, we have the price dropping lower, right? Below this gap. And also we have in here as a confluence, we have also normal fair value gap, right? So we have the inverted fair value gap and the gap, right? And you can see how exactly on this midpoint the price has dropped down, right? Now I need to analyze my range, right? So as I have described it here, I want to see a run out of the range. So what would be the range for me in here, right? So as I can see, the price has been dropping in here in this daily candle, and then we have actually the range inside of this candle, right? Now the price is running above the range where we could potentially target it, right? So 50% or this low, right? So anyway, that's a little bit further. So yeah, now let's go back down to the 4 hours and let's look at this, right? So we have this range in here, this daily range, right? Now we can see that the price, let me bring this back in here. Yeah, so we can see that the price basically has been running out of the range, right? Has been rejected, dropped lower, right? But still we didn't see a proper displacement, which is the gap, right? So let's go to 15 minutes, right? But we didn't see a proper gap in here. So then we need to see the price breaking the lows, right? Then we expect again taking out some of the liquidity or retest the level. However, in here it has run above this level, right? And then break lower. Right now in this is a breaker block, right? So this is a last down candles before running out for the liquidity, and then price close below it. It's a validated breaker, and then from there you can be shorting, right? Where you would be targeting, well, as said, we have this range in here, right? And the target would be 50% in here, right? So let's see if it will play out, and I think it has a big chance, right? So yeah, maybe it sounds a little bit simple. What you need to do is to do a lot of backtesting or journaling, but you will find that you will be able to see this quite soon, because I would say that it's not very difficult. So basically, if I want to basically simplify this, what I am looking for is that basically I have the trend down, right? Then the price is making some structure, right, in here. And what I want to be shorting is always you have some high, right? So it could be here also will be some small structure, right? So what and here also, right, and also in here, right? So what I am trying to do is basically trying to short run above these structures, right? Above this structure, right? Above this one, right? And then there I'm trying to short, right? So it is, in my opinion, the best way to trade, because what many people are doing is that basically prices, for example, breaking the lows in here, and if you shorting this, you know, yes, you can of course catch some trade. I'm not saying that it's not bad, but look how big distance you have for your stop loss, right? Where you will hide your stop loss. You can put it in here, but you never know how far the price will go, right, out of the range. So basically what I also want to see in here, this must be clear, is that because I never know how high the price will run above this range, right? So we have this range in here, and then the price could do something like this, right? And I never know this, but where I will be interested once this happens, right? Then the new range is defined in here, right? But then always you need to also see that the price basically came back to the range, right? And then you can be targeting this thing, right? So yeah, this is it. This is in my way, in my opinion, the simplest way to trade. There is some little bit more into it, which is possible to describe, right? So if I say that, so if you basically don't catch this trade, then what price mostly do is going down, and then it give you pullback, which would be from this high to this low, and then you will have a Fibo 61.8, right? Then the price going lower, and then it start to do some range, and then taking the range high, and there is another entry, right? But this is the basics which you need to know now.